Let's have a look at the following example. Pre-adjustment trial balance of Rolls Traders as at 31 March 2017 is as follows. Now what's required is the adjustments, and for this adjustment we have repairs still owing $200. Now what's required is to identify the two accounts from the adjustment. The one account we have is repairs, and the other one, the keyword is owing, so that means it will be accrued expenses. After we have identified the two accounts, we need to calculate the amount applicable to each of the two accounts. So first we have accrued expenses, that is the $200, and then afterwards we have our repairs account, which is the $1,000 plus the $200 owing, which will give us $1,200. Now let's have a look at the following notes. The amount for income and expenses in the trial balance are paid or received. In this case, the accrued expense is the amount already given, which is the $200. No further calculation needs to be made after this. And then to get to the repairs amount, we must add the amount paid, which is in the trial balance, with the amount not paid, which is in the adjustments. Our amount paid is the $1,000, which is in the trial balance. We would need to add our amount not paid, which is the $200, which is in the adjustments. So in our calculation you can see it's the 1,000 plus the 200, which will give us the 1,200. Now why is it 1,200? Because our expenses are recorded as they are incurred, not necessarily when we paid for them in cash or not. This is due to the accruals principle. So our repairs, which we have paid for $1,000, plus our $200, which is not paid, will give us our total repairs of 1,200, which is the correct amount. The second example is for the amount per month given. Let's have a look at the pre-adjusted trial balance for Rolls Traders again. The adjustments is as follows. Advertising per month is $600. The advertising for February and March 2017 is still due. We are required to identify the two accounts from the adjustment. The two accounts is advertising, and our keyword is still due, which means it's accrued expenses. After that we need to calculate the amount applicable to each of the two accounts. So now let's have a look at our payment schedule for our advertising. In our adjustment it says that February and March is still due. We still need to pay for February and March, which means 2 months has not been paid. So our accrued expenses is equal to 600 times 2 months, that will give us $1,200. And our advertising expense is 600 times 12 months, which is $7,200. Let's have a look at our notes. The amount outstanding is not given in the adjustment, so we need to calculate them. Expenses are supposed to be paid until March 2017. That is from the beginning of the period until the end of the period, which is 12 months, but we did not pay for January and February for the 2 months. If each month is $600, then the outstanding amount is 600 times 2. That's to say $1,200. Let's have a look at our next example. The following two examples relates to when no amount is given. Let's have a look at example 3a. Again, we can have a look at our pre-adjustment trial balance for Rolls Traders as at 31 March 2017. And our adjustments is that interest on fixed deposit for 5 months is still receivable. So we are required to identify the two accounts from the adjustments. The first account is our interest on fixed deposit, And then if we have a look at our keywords, we have still receivable, which means that it will be an accrued income. After that, we need to calculate the amount applicable to each of the two accounts. Again, let's have a look at our receivable schedule. There we can see that for the months from November until March, we have yet to receive interest on our fixed deposit. So for those 5 months, we have not received any money. Now to calculate this, we can take our amount received divided by our months received. And we have received 1,050, and we have received that amount for 7 months. So our monthly receivable amount for interest on fixed deposit will be $150. So we can work out our accrued income as follows: $150 times 5, that will give us $750. And we can work out our interest on fixed deposit by taking the 150 multiply by the 12 months. That will give us $1,800. Another way we can work out our interest on fixed deposit is by taking our 30,000 that we have in the trial balance and multiplying it with the 6%. That will also bring us to $1,800. The notes for this example is as follows: the amount not received is not given in the adjustment, so we need to calculate for that. If each month is $150 and 5 months is not received, then we need to multiply our 5 times 150 to get 750. To get the interest on fixed deposit, we need to remember the rule that income must be recorded for 12 months. So if we have the amount per month, all we need to do is multiply the amount per month with 12 months, or we can simply take the interest on fixed deposit and multiply it with a percentage. Let's have a look at our second example where no amount is given. In example 3b, we again have a post-adjustment trial balance for Rolls Traders as at 31 March 2017. The adjustments is as follows: salaries was only paid until 30 November 2016. What's required is to identify the two accounts from the adjustment. Well, the one account is salaries, and now we need to look for keywords. Here we can see that it's paid up until 30 November 2016 and the year ending is 31 March 2017. So in this case it is an accrued expense. After that, we need to calculate the amount applicable to each of the two accounts. So let's have a look at our payment schedule again. As we can see, we did not pay from December until March, which is for 4 months. So we need to calculate the amount per month. We do that by taking the amount paid divided by the months that we paid. We paid $5,000 over 8 months, so the monthly payment will be $625. So now if we want to work out our accrued expense, we take that $625 multiplied by the 4 months outstanding, which will give us $5,200, and our salaries account will be $625 multiplied with the 12 months. That will give us $7,500. And the notes for this example is that our outstanding amount is not given, so again we need to calculate for it. And if each month is $625, we will multiply that with 4 months, which is not paid, to give us $2,500. To get the salaries amount, we must remember that expenses must be recorded for 12 months. So if we have the amount per month, we can multiply it with 12 months. And remember, for financial periods not ending on 31 December, it's always advisable to draw a timeline. Let's have a look at one below. Say our year begins at March 2019. That's the start of our financial year. And March is our first month. So our second month will be April, our third month will be May, and so forth until we get our 12th month, which is February, and the year will be 2020, and this will be our end of our financial period. So to conclude, we can work out our accrual adjustments in 3 ways, which is the amount already given, the amount per month given, or no amount given. Our income and expenses are recorded on an accrual basis, which means that the amount not paid or received must be added together with the amount paid and received. Our income and expenses must be recorded for 12 months. In regards to working out our adjustments, if no amount is given in the adjustment, we must first calculate the amount per month. That we do by taking the amount paid divided by the months paid. And the amount paid we will get from our trial balance.